Thanks very much for that introduction, Pat. Just conscious of time here. Over the next couple of hours, I want to talk to you about... well, at least I was just testing if you were still awake, okay? So, I want to talk about the issue of Brexit. And I have about 20 minutes. And to be honest, we could spend 20 days talking about Brexit and the possible implications. So I'm going to give you a very quick, I suppose, whirlwind through the various issues and give you some of my insight on where I think this will go, but I think more importantly, trying to identify what the issues are for your industry and even more importantly, what Irish policymakers need to be looking for reflecting the concerns of your industry over the next couple of years. I want to start off, first of all, by just describing pretty quickly the global economic backdrop, because as you're aware in your industry, since the period after 2007 was absolutely catastrophic for the world economy and for the Irish economy. We saw most of the major economies in the developed world literally fall off a cliff after 2007, 2008. The good news is now, over the past year particularly, we've started to see the world economy coming back quite strongly. And, the United States is doing reasonably well. The UK is doing reasonably well despite the Brexit uncertainties. And most importantly, from an Irish perspective, the Eurozone economy over the last 6 months is starting to improve. So the global economic backdrop within which the Irish economy operates is very definitely getting better. So it's a reasonably upbeat story, notwithstanding some of the political risks that are out there. And I think I have spent most of my life over the past 12 months talking about politics rather than economics, because we've had some catastrophic political events that are going to have very significant economic consequences. The election of Trump in the United States, the Brexit referendum in the UK last June. So there were two elections that definitely didn't go in a positive direction. We had the Dutch general election this week, which actually turned out pretty good. Well, maybe I'm giving my own personal political perspective here, but I would have thought the rejection of the far right in the Netherlands was a positive development for Europe. We have elections in France the end of April and the second round in early May. And the bottom line there is, if Marine Le Pen was to be elected president of France, she said she would take France out of the single European currency and would hold a referendum on French membership of the European Union. That would be absolutely disastrous, because the EU can live without the UK, but the EU could not live without France. And if France were to leave the system, the game is up, and then we enter into total and utter chaos at an EU level. I don't believe it's going to happen. Marine Le Pen is not going to win that election, but it's a political risk factor that you'll hear a lot about over the next few months. And then in September, late September, we have an election in Germany where Angela Merkel is going for her fourth term. She's under pressure, but she's really under pressure from a slightly left-of-centre candidate, Martin Schulz. So if Merkel were to lose power, she would be replaced by Schulz. Wouldn't be a disaster. It'd be a slight change of focus in the German economy. But I suppose the point I'm trying to make is that there's a lot of strange political stuff going on around the world at the moment, and those political events have economic consequences, with Brexit obviously being the most notable one, which I'm going to spend a little bit more time talking about. And why I'm talking about the world economy and why I'm now talking about the Irish economy is that trade is very heavily correlated to economic activity. So, for example, for every 1% growth in GDP, you see air traffic growing by 1.2%. And road haulage has a pretty similar multiplier effect. So, global economic growth going up leads to an increase in trade and vice versa. So that's why the economic backdrop, as you know, is incredibly important. From an Irish economic perspective, We have come through the horrors since 2007, 2008. The impact has been just so wide-ranging and far-reaching that very few businesses have been unaffected by what has happened. But the good news is that over the last couple of years, the Irish economy has recovered very, very strongly. I remember sharing a podium with a couple of economists about 2011, 2012, that period. Their names I won't mention. One of them was Russian. But basically, they were telling us that the Irish economy would never again grow, that we were in for a generation of economic despondency. I never believed that was going to be the case because that's just not human nature. Business people, entrepreneurs just get up out of bed in the morning and they make it happen. So human behaviour really drives economic activity more than anything else. And over the last 2 to 3 years, we have seen a very strong recovery in the Irish economy. There are still issues, and it's inevitable that when you experience the sort of collapse that we experienced, the legacy takes a long time to work through. And the legacy here at the moment is there's a housing crisis. We basically don't have enough houses. Public services are under serious pressure after years of underinvestment. Pay pressures are starting to build in the economy. So there's a lot of domestic challenges that will have to be managed very, very carefully over the next few years. The external challenges, I think, are pretty obvious. Trump and his impact on foreign direct investment in Ireland is an issue because he said he's going to slash US corporate tax rates to try and encourage multinationals to come back to the United States. And given that we have over 700 US multinationals operating in this country, something we need to be aware of. But by far, the biggest issue is undoubtedly Brexit, which I will get to in a second. I think, in the face of all of these economic shocks, the most important thing for any economy is competitiveness. You need to make sure that your economy is as competitive as possible. And I'm not just talking about wages, I'm talking about all of the costs of doing business. I'm talking about the quality of infrastructure. I'm talking about the quality of the workforce and so on. So competitiveness is a big agenda. But the more competitive you are as an economy, and indeed the very same thing applies to a business, if you're hit with some sort of shock, your ability to deal with that shock will be dependent on how healthy you are as an economy or how healthy you are as a business to cope with that. So I'm spending about 2 minutes covering this. I could spend 2 hours talking about it, but it's a big agenda, but I think it's a clear agenda, and we need to be really careful about how we manage the Irish economy through the Brexit challenge particularly. But let's face it, we've come through the post-2007 shock crash. And if you can come through something like that intact, it does say something very, very positive about the resilience of the Irish economy. But having said that, Brexit is really the issue we need to think about. Pat mentioned that Brexit is a new addition to the dictionary, and it is. Even I remember speaking at an event about 2 years ago on Brexit, where the audience were kind of looking at me as if I was talking about something very, very strange and exotic. But over the last 18 months, it has really hit us big time. And then on June 23rd, obviously with the vote. So I just want to talk, first of all, about some of the terms around Brexit. And those terms are very important in the context of what Theresa May is trying to achieve in the UK. And I suppose even more importantly, what the EU 27 will be trying to achieve in the negotiations, which will begin shortly. A customs union is basically a group of countries who remove trade barriers in goods with other countries, amongst themselves. So in other words, a customs union is a group of countries that can trade goods freely. The European Union is a customs union, but the European Union is also something more than that. It is a single market, and a single market is based on 4 pillars: the freedom of movement of goods, which is the customs union bit, the freedom of movement of capital, which is basically money is free to flow amongst the member countries, the freedom of movement of services. So in other words, an insurance company here in Ireland can sell its services, an economic consultant can sell his or her services to any other member country of the single European market. So it's the free, and I suppose the fourth pillar is probably the most important one in the context of Brexit, and that is the freedom of movement of people. So in a single European market, there are four pillars: the freedom of movement of goods, people, services, and capital. Looking at where this might become relevant to Ireland over the next couple of years, one example is Norway. It is not a member of the European Customs Union, so it's not a member of the European Union. However, it does have access to the single European market, but in return for that access, it has to accept the rules of that market. So in other words, Norway is free to sell goods and services into the European Union, but it has to accept those four pillars: the freedom of movement of goods, people, capital, and services. And that really is the nub. From an Irish perspective, the best outcome would be that Britain wouldn't leave the European Union. But that ain't going to happen. Britain is going to leave. The second best option would be that Britain agrees a Norwegian-type arrangement whereby Britain would have access to the EU market. So free trade would continue for all of us with the UK. However, and this really is the crux of the issue, in return for that, Britain would have to accept the freedom of movement of the four pillars. And the people one is the big issue, because the referendum was lost by the Remain people last year on the basis of the freedom of movement of people. Basically, the Brexiteers argued, if you want to protect Britain from migration, the only way you can protect your borders is outside of the European Union. So what I'm really saying is that that type of Norwegian-type deal for Britain is highly unlikely, because Britain is highly unlikely to accept the freedom of movement of people. And in return, it is highly unlikely that the EU would grant Britain a concession on this, because if they start granting concessions to one country, every other country will be looking for similar concessions, and then the whole basis of the European Union falls apart. So on January 17th, I have to be very conscious of time here, because I genuinely could go on for 2 hours. This stuff is just so complex. But on January 17th, Theresa May clarified a lot of the UK's position on the whole Brexit issue. She said that Britain would leave the European Union. She said that partial membership, as in a Norwegian-type model, would not be desirable. She said that Britain will not be part of the single European market, and that's because of the freedom of movement of people. She said that Britain would not seek to be fully part of the customs union. So the implication of that is that she'd like to be partly a member of the customs union. So it's a little bit like having your cake and eating it. It's looking for the best of all worlds, but that's what she's looking for. She said that no deal is better than a bad deal. So if at the end of the 2-year negotiation period, Britain is not happy with the deal that it gets from the EU 27, she would walk away from the European Union, and World Trade Organization trading arrangements would then apply immediately. And WTO tariff arrangements are incredibly complex. There's about 5,000 different tariff rates. It's 50% tariff for live cattle and beef. It's 19% for chocolate. It's 10% for cars. It goes on and on. There are literally thousands of different tariff rates. But the bottom line is that that WTO type arrangement would imply barriers to trade and would not be a good outcome from an Irish perspective. The important point is that this is the UK's perspective. What we will wait to see is what the EU 27's perspective will be. And I can assure you that every EU 27 member country will have its own unique issues. We know what they are here in Ireland, and I'll cover them in a second, very quickly. But in Germany, for example, car manufacturers, they will want free access to the UK market because they sell a lot of BMW and Volkswagen into the UK. So I could go through the 27 member countries and you would find that every country will have its own unique issues in relation to this negotiation process. And the bottom line is that politically, at a new UK level and at an EU 27 level, this is going to be a nightmare trying to reach some sort of agreement. I spoke at a Brexit lunch in Chelsea in London in early July, about 10 days after the referendum vote. And I started off very foolishly by saying that I felt Britain had made a mistake, that in the long term it would not be good for the British economy to leave the European Union. The abuse started to flow at that stage. There was guys roaring abuse up at me. And then others in the audience who were pro-EU started attacking the Brexiteers, and it descended into total farce. And I became an interested spectator rather than somebody who was meant to be addressing the conference. But it just left me with a very strong view that it's going to be an absolute nightmare for a Prime Minister to try and navigate Britain through these waters. It's going to be very, very difficult. The challenges. Theresa May clarified this week that on March 29th, Britain would invoke Article 50. And Article 50 is that part of the Lisbon Treaty that a country has to invoke if it wants to voluntarily leave the European Union. The problem is that it has never been invoked before, so we are very much entering into uncharted waters. But once that process begins, once Article 50 is invoked, there will be then maximum of a 2-year period of negotiation. In other words, there will be a 2-year period during which the divorce agreement will be reached. It's the terms of the exit. In other words, how much Britain will have to pay back the European Union because of EU pensions and so on, lots of other issues. €60 billion bill is the one that's thrown about at the moment. So March 29th is when that process begins, when Britain invokes Article 50. And the EU has said that on April 29th, a month later, the EU 27 will put its negotiating position on the table. And then all hell breaks loose. We're just entering into this period of uncharted waters during which, as I said, agreement will be very difficult to achieve. From an Irish perspective, what are the big issues for us? And they're pretty much the same sorts of issues as for you as an industry. The impact on sterling. And you could certainly say at this point we have already felt one impact of Brexit, that is on the currency. Sterling has weakened sharply since last June, but it had been weakening prior to the vote. But basically we're in a situation today where sterling euro is trading at about 86 pence. It was down at 68 pence 2 years ago. So that is a massive currency adjustment. And when you get that sort of currency adjustment, it has a huge impact on trade. It makes our exports a hell of a lot less competitive. It makes our imports much cheaper from the UK. So that's one impact. Second impact, what does it do to the UK economy? The UK, for indigenous Irish industry, is by far the most important market. And if the UK economy gets into difficulty because of Brexit, it will obviously make life more difficult for the Irish economy. The third issue then is, and this is the one that comes after the Article 50 negotiations, that 2-year period ends, then Britain will start to negotiate with the EU what the trading arrangement will be. And there are a lot of different possibilities here, and we definitely cannot be certain how it's going to turn out. But I think the important point is that if at the end of the 2 years Britain is not happy with how the Article 50 negotiation process goes, then Britain will walk away and we will end up with a hard Brexit, which would imply barriers to trade and so on. That really is the nightmare scenario from an Irish perspective. There's definitely an opportunity on the foreign direct investment side, particularly in financial services. UK companies who service the EU market will relocate some of their operations to an EU country. and that definitely is an opportunity for Ireland. There's a big issue, obviously, about the Northern Ireland border, and different people have very different views on this, but personally, I cannot see how we can avoid a hard border, because Northern Ireland, the Irish Northern Ireland border, that will be the border of the EU. So having some sort of soft border arrangement, I find it very difficult to see how that will work. So those are some of the issues. From a sectoral perspective, I suppose the important point to make is, what sectors are most exposed? Well, it's the agri-food sector is definitely most exposed. 40% roughly of our food and drink exports go to the UK market. So it is by far the single biggest export market for the Irish agri-food industry. And you, as an industry, facilitate a lot of that trade. So if barriers go up to that trade, it definitely will have negative implications for that trade. One area where Brexit is already impacting, as I say, is on the sterling front, and for the motor industry, it is causing serious difficulties. So this is what has happened: imported used cars. In 2016, we imported over 71,000 second-hand cars from the UK, purely driven by the currency. And the problem, and indeed to this evening, imports this year to the 20 closed business last night actually, imported cars were up another 52%. So there's a lot of cars flowing in, and one of the consequences of that is that new car sales are down about 29% so far this year. So it's causing a displacement of car sales. I'm not going to talk about the opportunities because I'm very conscious of time, and I want to talk about quickly the issues for yourselves. But this is what has happened on the sterling front. You can see out there on the right-hand side, a sharp weakening of sterling causing massive dislocation for Irish trade. Now, for the road haulage industry, what are the issues? Well, looking at the existing issues for your industry, and I hope I am reflecting it correctly and accurately. In the Q&A, I'm sure if I'm talking rubbish, I'll hear about it. But as I understand the industry, these are the current situation. It's a difficult environment. It's a volatile environment. Margins are being squeezed very, very heavily. An ageing workforce. I believe the average age of the truck driver in the Irish fleet is about 48. So issues there. Insurance costs have gone up between 50 and 100% over the past year for the sector. The 2-ton reduction in carrying capacity in July of last year has effectively reduced carrying capacity by 7%. So for a very tight margin industry, that sort of legislative change is having a significant impact. We have the lorry road user levy of £10 per day, and I heard Verona Murphy on George Hook at lunchtime today, excuse me, talking about the impact that levy is having on an industry where margins are already so tight. And obviously one of the calls here is that that levy should be eliminated, at least in Northern Ireland. So a tight, low-margin industry that is subject to a lot of volatility. 47,200 people employed in the industry. We have 1.2 billion in trade with the UK every week. So it's a lot of goods flowing in both directions. We have big milk processing issues around the Northern Ireland border. The UK accounts for almost 39% of tonnage through Irish ports. 80% of road freight into Europe goes through the UK. So you just think about a truckload of fish from Donegal going to France, possibly will have to cross 4 borders. So the logistics of that could be very, very difficult. Currency movements I've already spoken about having a significant impact already, and God knows what's to come in that regard. Border controls if we will inevitably get some sort of border controls, so the implications for yourselves would reflect themselves in more paperwork, delays, etc. So potentially very, very serious. The whole cabotage issue, there is a distinct possibility, because once the UK is out of the European Union, it can start to implement its own laws, and some of the concessions, for example, for car hauliers in the UK, they could be changed in a negative way for Irish operators. So work permits, will UK truck drivers as non-EU citizens, will a work permit be required? And if so, the cost of that, the bureaucratic difficulty in going through it. Another issue that might sound very trivial, but in a low margin industry that's subject to currency volatility, etc., roaming phone charges could go up dramatically once Britain leaves the European Union. So the industry, and this really is, I won't say it's picking numbers out of the air, but at a conservative estimate, the cost to your industry in the case of a hard Brexit could be €180 million per annum. So what are the issues? What should your industry be looking for? And I have to say that there is a window period about to open. That period between March 29th, when Article 50 is invoked, and when the EU 27 presents its negotiating position. There is a window of a month there when the Irish really need to get all of their issues onto the EU agenda if they're already not on the EU agenda. Because once you go into the negotiation process, it will become more difficult to influence the way it might go. But some of the issues, we would be looking for a preservation of the common travel area with the UK. We would be looking for the barriers to trade to be limited. A possibility of having a free trade corridor through the UK for Irish trucks, travelling to the continent. There will have to be an increased focus on IT systems at border crossings to speed the process up. The abolition of the road user levy. Cabotage legislation must be fully implemented in Ireland, which is not the case at the moment. HGV drivers must be placed on the eligibility list for non-EU work permits, and they're currently not there. Changes in ferry routes and times, in other words, more ferry crossings to the continent, avoiding the UK altogether, is another possibility. Another issue would be, coming across into Ireland from the UK or into the UK going the other direction. Is there a possibility that the VAT may now have to be paid up front, different from the current situation? And if that was the case, it would definitely create cash flow difficulties for the industry. So I'm really sorry for skipping through all this stuff so quickly. As I say, there's 2 or 3 hours of stuff we could be talking about here. But what I've tried to highlight here are a lot of the very practical issues that will impact on your industry over the next couple of years and beyond that. And I think it's absolutely essential that you as an industry get all of those issues on the table as quickly as possible. And I know the process is already well underway. All of these issues have been put on the agenda, but they are really significant issues because I have spoken at Brexit events of every type over the last 12 months, the motor industry, tourism, farming, food, etc., etc. But your own industry seems to me to be the one that is definitely most exposed to changes that could come about as a result of Brexit. There is no other sector that has so many issues that could potentially impact upon it. So I'd like to wish Verona Murphy the best of luck on your behalf during this whole process, because it is going to be incredibly difficult, because every member country will be looking for their own particular issues, and what we'll end up with at the end of the day is some type of compromise. So thank you very much for your attention. There will be an opportunity for questions in a few minutes. Thank you.